Hey, good morning, everybody. This is the professor with Day Trading for Success. So today I'm going to be going over the open strategy from beginning to end. I got an early copy of the book. I know the book comes out in a few days. I know that all the prop firms and the libraries and everything else all got pre-copies, and I know that they've already sold thousands of copies based on the pre-orders. But it should be available to you guys on Saturday or maybe midnight Friday night. So this thing seems like it's in my peripheral vision here. So there has been some changes, and I just wanted to make sure I captured them. First of all, I mean, this is very exciting because really this book is the first book I've ever seen ever that has a detailed strategy, not just one, but 4 strategies to trade the open. Now, we all have traded them, different strategies like this, which is it's basically breakout range strategies. That's what they are. But there's one specific component in all these strategies that really turn the corner from being like a 60% accurate scalper into maybe an 80 to 90%. By the way, read this disclaimer. I am not a licensed financial advisor, although I won't be showing you any live demonstration videos today. I'll be showing you the complete setup. And I'll also make this layout available that I have right here. But you should seek the advice of somebody licensed before you try to trade this strategy or any other strategy. So please read that. So this is my anyway. The second component that's so important is that you only trade long above the breakout range high and only trade short if you're a short trader below the breakout range low. There's no going back on that. There's no up and down. If you're above the range breakout, you can only go long. If you're below, you can only go short. And that might seem counterintuitive if you're professional scalpers. I'm sure many of you are in prop firms, or if you had you listen to them or whatever about professional traders and how they trade, how they scalp and day trade, and they will tell you that scalping is the fastest way to make money, to get rich day trading. But it comes with responsibility and a skill, and you have to have a trading plan that you follow, and you follow your max loss. So there's a lot, and that's the hardest thing to do. So we promote a lot of books on how to control yourself, like Trading in the Zone by Mark Douglas. I would read that, and then we promote also Best Loser Wins, Tom Hougaard. I'll have a link to both of those if you're brand new. Obviously, the professional traders already have all those books, and then of course Day Trading Volume 1, which is the only range-bound large cap strategy put out by the same company, the $1 Million Margin Club, that's putting out all these open strategies, which is full of all these professional traders. So, and then they have a bunch of the candlestick pattern playbook's another one. You need to know your patterns. It doesn't come into play for this strategy though, which is great. You do want to be proficient with your indicators. You do want to understand trading a bit. So this strategy that I'm showing right here is not for beginners. It isn't, but you could learn it if you keep watching the video demonstrations, you read the book that they're going to be putting out, and that's going to be called, by the way, I'm going to be a terrible promoter, Day Trading Volume 4, Day Trading the Opens. Day Trading Volume 4, Day Trading the Opens. Now, the other thing that I found, why I'm talking about the books, is they gave me a copy of the companion book as well, and that has the 5th day trading strategy. And the other thing about that, because I know they're going to be changing, they're going to be doing new copies of these books as they go on, right? But they did make a few things more clear in the companion book, which is why it's a companion for the first book, that made it a little bit easier to understand the concepts behind why these certain levels are picked, these strategies are picked, and how to trade a certain way. I'm going to try to cover that in this video. So this will be a fairly long video, but I do want to get it done so I can trade this morning. And so I'm going to try to get this out as quick as I can. But so I'm going to go over this. That's my cat in the background now walking by. Yeah, you're okay. All right, you're going to have to move on over here. Move on down the road. Yes, that means good luck. When shiitake comes up, it's good luck. That's my pixie bob. So this layout is a little different than the one I was showing you, because as I was trading this strategy after I got the book, I went back to, this is specifically for the open. So I have a 1 minute chart here, of course, with the scalping indicator down here. There's a day chart minimized down here. Then there's my active trader tool over here. And then there's the level 2. And then I have a 5 minute here that I use. And then another 5 minute minimize. I have the SPY down here. And then I have the news down here. So you're going to want to look at, you're going to want to have a setup that at least has 2 5 minute charts, a day chart, and a 1 minute chart. And you really should have you should have a setup like this. I'll make it available. I mean, you might like to do it a different way, obviously, but I will have a link to this. Make sure you watch episode 189 if you're having trouble bringing the link in, because it's not intuitive how to do it. Other than that, I'm going to get right into the points. And the first thing is, how do you scan for this stock, for the open stocks? Already lots of questions about that. So I detached the scanner over here. I'll keep it under my picture. Okay, so here's the settings you want on your scanner that is going to show you in the book. $25. Actually, the book has $5. I don't like to go that low, but that's what the book has. So $5 to $500. You don't need a market cap. I have this on here because I scan for different stocks really quick. You don't need a volume. You want your ATR, custom ATR, to be equal or above 4, greater than $4. That's $1 is what that means, and that's on the day, over a 14-day period. 14 bars means day. You want to make sure that at least 10, because the book says pick 3 stocks. You want to sort by volume, descending. So these are all important. Well, these two particularly are important, descending and volume. It shows them on them, but in the book it doesn't make a big deal. So look at how they do it. So once you scan, these stocks come up, and on your scanner, you're going to want to have hard and easy to borrow, because if it's hard to borrow, as you see over here, you can't trade it for the open. At least you can't trade the short. So unless you make arrangements, and I know a lot of professional traders do that. They just keep these in them, and they have arrangements to borrow those, but they don't make it readily available on most brokers unless you make a deal. And I'm not going to get into how you do all that. But so when I scanned, the same usual suspects came up. NVIDIA, Snow is new, but that's hard to borrow. Then Tesla, AMD, and then you have the Space Mobile here. That's hard to borrow too, right? Yeah. Apple. And this is Broadcom, and then Amazon, and then Taiwan Semiconductor, and then this one, MicroTechnology. MicroStrategy is hard to borrow today for some reason. And anyway, so now what I am going to do, I'm just going to take the top one because you pick the highest volume. So I'll just start by setting up NVIDIA. Okay, so I'm going to make sure you get it. That was under my picture, right? Yep, okay. So you guys saw so that's the first thing you do. The next thing you do, and I have my little notes here just so I don't miss something. I've been doing it kind of automatically, but so then you'd open up your day chart and you're looking for a consolidating pattern over the last 10 days. So what does that mean, really, right? Well, I'll tell you exactly what they mean by that. And this is covered more in the companion book. So one of the critiques that was brought up is that a lot of times professional traders, they just think things are matter of fact, like everybody knows, just like, so they forget to, excuse me, guys, point out details that maybe not everybody knows. They do say that this strategy is not for beginners, although I think beginners could learn to trade it very quickly. But what consolidating means is, this is the last day, the 21st. I'm recording this on the 22nd of August, 2024. Excuse me, coffee's fighting back. So, I still, my mic's working. I don't have any help with me this morning. They're all starting to arrive. But so we look at that last day and how many of these candle wicks or bodies touched within this candle wick and body. And they're looking for as close to 10 as you can get. But as you can see, we only have 2 because this drops off and then we're past 10 days. So this would only rate a 2 if you were rating it. They don't really have a rating system like that for this. But All of these stocks are tradable. That's the great thing about it. The reason why you want more days across is for your profit pivot levels, like when you have the opportunity to take profit. It's based on historical data, and you're trying to touch the wicks and bodies of other candles that might be just above or just below your breakout ranges, right? And we'll look at that on the 5-minute chart in a minute. But it doesn't mean that there aren't a lot of them in the last 2 days that can really come in handy. The great thing about this strategy, I'm so excited about it. We've all been making money trading it. And some people might argue that's just because you have scalping skills, but it's not true. And that's what I'm going to prove to you today, that it's not true. Yes, you do want to be fast reflexes. Gamers, for instance, this is an easy ticket to make a living if you're a gamer and you have fast reflexes, because that's really, and thought process, that it's really all you need, because the strategy lays out when to go in and when to go out. And we're going to do that. We're going to show you how. So anyway, this is step 1. So this is only a 2, but I'm going to stop right there. I happen to know that the next one, which is, I pre-programmed these in here on the scanner, the next one, because we couldn't do snow, was Tesla. Tesla was also good. When I looked just a few minutes ago, not necessarily here, but it had across this way, it had 3, because this wick hit here. So you had 3 days here, 1, 2, 3. Again, you're looking for 6, 7, 8, 9 if you can, but keep in mind what's happening right now is if you're watching the market right now, it's been so erratic. It had that big dip a couple weeks ago, and now it's just kind of steadily rising up. So it's hard to find consolidating day candles that are crossing each other, that keep leaving the area. You know what I mean? So, but anyway, but there's always something to trade. That's what's so great about this strategy. So that's the first thing you do, is you just figure out, does at least 1 or 2 candles touch it? The more the better, right? Then you're going to you want to check your pre-market. Make sure I get the order right that the book says, because I do it in a little bit different order. So that's why we have 2 5-minute charts here. So the first 5-minute chart is set for 10 days. So remember, this is the day we're looking to trade, because today hasn't opened. So I'm going to show what would have happened if we mark this out for, I'll be marking this out too, but I'm going to show what would have happened, right? So let's take a look. So here's our pre-market. Now you're looking for a consolidating pattern in a pre-market. Now, what does that mean? Oh, I didn't look at the ATR. Oh, I'm on Tesla still. Sorry. All right, slow down. Go back to NVIDIA. That's good too, because I need to go here. Sorry, and this is obviously not edited, guys. Let me go back to the day chart for a second. So on NVIDIA, so we need to look at the ATR down there. So that ATR was $6.44. See it down here? When I go over the candle, $6.44. So divide that by 2, you have $3.22. So when you look for a people ask all the time, what's a consolidating pattern with pre-market? So we're looking that we want to make sure that the price action from the day before, didn't move more than $3.22. So picture like a couple of columns, and in this column is that $3.22. It's kind of like a big snake going across your screen, and then move that into the area. So if we had, and you can do this really quick. So remember, this strategy is from 7:30. I'm going to do the first one. I'm going to do open strategy number 1. They're all numbered. I should have made that clear. Because at the time that it is and the market's not open, I'm doing open strategy number 1 to show you. But the beginning of this is marked out the same way. But when you get to open strategy number 2, you're marking out the open and close of a 30-minute candle. Open strategy number 3 is the first open session 5-minute. Open strategy number 4 is the close of a 15-minute candle. Body, high and low. And then open strategy number 5, I can't talk about yet, is what I'm told. So when the books are out, then you can talk about it. So, and that would be in the companion book. So you're going to want to get that, because open strategy 5 is pretty cool. And the day trading for success is not affiliated with the $1 Million Margin Club. Okay. So people keep saying, I bought your book. It's not my book. I'm trading the strategies. Yes, the $1 Million Margin Club is who's putting out those books. So just like Trading the Zone is not my book. Best Loser Win is not my book. Wins. So, and there's going to be a lot of other strategies I trade. It doesn't mean that I'm going to check them out for everybody, and I believe in a lot of them. I get excited and I promote, and it might seem like it, but there is this, when I get the emails, they thank me and they say, I bought your book. Well, I appreciate that you bought the book because I support the $1 Million Margin Club. I just want to make it clear. It's the $1 Million Margin Club's books, not the professor's book or Day Trading for Success. But that doesn't mean I don't. It's great that you are thanking me. But so now we're looking for the high and low between 7:30 a.m. and 9:15 a.m. So we have yesterday's all set up to do that. So, and then we want to make sure when we well, first of all, I'm sorry. We're looking for a consolidating pattern that didn't move it more than $3. I got sidetracked there. So if you look across here from 4 a.m. on, you had like 126 up to 127. So it did not move $3, right? That's 5 a.m. But let me just, yeah, you can see here's the 4 a.m. It did not move $3, not even close. So if I were to put this snake is much wider than it shows here. This band. So we have a good consolidation. This is a tradable stock on both levels now. The 2 days isn't perfect, but this is consolidated. Why do we look for a consolidated pre-market? Because it's easier for a breakout. We want a breakout, right? We're looking for a breakout. So we would mark these levels, right? So let me pull this level down, because this is the next thing we do. Yeah, mark the breakout range is number 3 here. So let's go to 7:30. Now it's not at 7:30. It's anything between 7:30 and 9:15. This does appear to be the lower level right here, it looks like, guys. So that's your lower level. So I'm not going to do it exactly. I guess I will. What does it say that candle closed at? Well, I'm going to guess first. It looks like it's about right there. Close. There we go. Oh, no, it's not there. So this candle's close was at 127.14. So we'll go in here. Now it's probably going to take me to the 200. No. Stop that. No. There we go. So 127.14. Let's get it on the right line. We'll do a jagged. We'll call it the breakout low. And we'll do it double thick. And I am going to keep it extended for the profit pivot lines. So there's our low. And then we go up here. We've got our breakout. Let's mark up. Oops. Let's go to our high, which would be right in this area. And this is probably the high. So that closed at 127.86. Oh, that's where I put it, right? It looks like that's where I have it. Yeah. So that's right. So only I didn't make that green. So let's make that, edit that, 86. So all right, we'll make that green, and we will give it a jagged line here, dotted, dashed line, I mean. And now we have our breakout range. So you can mark these any way you want. They do it differently in the book. So now let's go to the next thing you do is you would set your fib levels. So let's open up a 5-minute chart. This is a 5-minute chart on a 10-day. So there we go. We want to try to get to the high and the low on the same picture here. Can we not get? Oh, that's pre-market anyway, so that doesn't matter. So we're looking for the high about over here because we don't know this information. So we only know to right here. Remember, we're looking at the day before, so we'll guesstimate on that one. But you get your fibs, you check off your low. I'm just going to get close here. 30. It's supposed to be at 32, and then from right there. That's our 5-minute 10-day fib. These are going to be profit pivot levels, and just make sure that's right. Then the next thing you do, according to the book, the next step, and this all goes really fast once if I'm not explaining it to you. Now we go to a 2-day. says in the book to mark out 3 stocks. Come on. It's not going to do it for me. So 35 and 80. That's right. Let's just back 5 cents to 5, and we'll make this a different color so we know which one's the 2-day and which way is the 10-day. I would respect the longer distance fib more than the shorter one. Now, if you look at the breakout ranges here, high and low, we already have profit-taking levels, right? So it doesn't look like any of the 10-day came into play unless the action gets way up here. But the 2-day definitely comes. Now, on the rules, you cannot take any trades in between the breakout range at all. So the next step we do before I go into all the rules is we set our ATR. Let's go back to the day. We'll set our ATR range. All right, so we have a close of let's see. I cannot tell a lie. A lot of times I have somebody else set this up for me, but let's see why I'm researching other stocks. So the close was 128.50. The ATR was $3.22. So that's 131.72. Yeah, 131.72. So we want to we're going to mark the high at 131.72. So we'll make it high. We'll make it triple thick. Now, typically you don't mark profit pivot points above this range because we're creating a range here, right? So then the low is, let me just get my phone as a calculator here. Sorry guys, no editing. I will get this out this morning for you though if you want to trade the open strategy. But I'm only showing you yesterday. So and we'll go over this. So we had a close at 128.50. This time we're minusing, subtracting. Does it sound like I was a math teacher? No, not really. It's like, all right, wait, 128. I'm sure I could do this in my head faster than what I'm doing right here. So this comes up to 125.28. Hopefully I did that right for everybody. 125.28. Look how close I made that line by accident. And this is your ATR low. Keyboard is way out of the way because I have a paper in front of me, and we'll do it a triple. Okay, so now we followed the steps it said to do. We have our ATR set up, which is the high and lower level of your profit-taking lines. That doesn't mean you can't trade. You know, all these, you have to remember, I get all these questions like, why did you do this when the strategy, they try to say your strategy, whatever, but when the strategy said to do that, it's because if it breaks the parameters, then I'm going to use common sense and decide, should I keep trading or not? So there's no absolute, right? It's amazing we get this much information to follow in any strategy because nobody knows which way the market's going to go. I mean, come on. But so then we engage, and say, what should I do next? Stop trading? Maybe that's the best answer because I want to follow this exactly. And it didn't have 10 days consolidated. The pre-market was just outside that range. None of the fibs touched or something. That might be a good call. Find a stock that's better suiting. But in your middle trading, that doesn't mean you have to jump ship if it breaks the levels. You can use the same strategy, utilize the strategy. Look at what's happening this morning. That's NVIDIA going up. That's great news. I have a position on NVIDIA that's much higher on one of my accounts. Look at that go. Did they just get news? Just this morning? Earnings forecast from Barron's. Yeah. So you should always have a news thing up. That's this morning. I will probably take a couple of positions on different accounts on this today, and I'm going to look at everything overall, but I'll give you some insight. Remember, I'm not a financial advisor. With that news and the fact that I think NVIDIA is going to go back up to the 140 it was at, I will probably trade this long today. This is great news for a lot of people that ended up buying and didn't play I played the gap down too when it was up at 140. I did it both ways, and of course you option traders, what you do too to kind of, hedge it, either way. So I think I have like 5 or 6 different positions on NVIDIA right now, on different accounts. So anyway, so the next thing, we marked the ATR. So now we're up to setting the profit and the fib levels. Now we're up to setting the profit pivot levels. So now this is the most subjective part. So this is 10 days across. How are we doing on time here? Okay, I'm doing good. And then I'll go over the overall rules of trading once we get this set up. And then we'll look at how it would have done. Okay, so we're just going to look at the one stock today because but I'll be trading this more. But this at least gives you a beginning added to remember I have tons of trading videos. If you look at in the archives, if you look at the playlist for the open strategies that have kind of watched the old open strategy from the Trading Journal logbook like a year and a half ago, that book I did help put out. And that's, but anyway, I won't go into all the details of why I was involved with that, but I really am into people logging. So I have links to all these different logbooks for options and futures and Forex and crypto and penny stocks. And, so you'll see all those links for different people that have specific strategies of the best traders in that genre, the strategy of that in those logbooks. So it teases you if you want to see what they have to say, the best strategies. I mean, I guess that's debatable who the best trader is in that genre, but because they want you to log, and I know you can log electronically, but what you can't do electronically or very well, I know it's a new world out there, but I like pen to paper, pencil to pad, whatever you want to call it, to put my thoughts down, and about why I took the trade, why I got out of the trade, why am I thinking of taking this trade, and a lot of notes. And I can tell you that looking back so many years of those notes, it's very helpful, especially if you get in kind of a slump, to go back and listen to your own words. Most people have respect for themselves and read Trading in the Zone, and that might help you with that. But we all go through these things where we think we're worthless. So anyway, I won't go down that road right now. But logging helps. Putting down your thoughts help. If you're a psycho murderer, probably not. But other than that, they help. So now we're looking to set profit pivot levels right. So here's our breakout range that we just set based on open strategy number 1. Remember, there's 4 strategies and even a 5th now. So they all work on breakout ranges based on different closing of candle bodies. Okay. But then other than that, the strategy is almost exactly the same. Almost, not entirely, but almost exactly the same. So let's see how many of these, how close are these historical candlesticks, bodies and wicks, near these breakout ranges. So you can see we can only go from here back, because here's the day we would be trading. So we wouldn't see any of this data yet. So, so I marked the fib in the wrong spot. Ugh. Okay, probably some of you saw me do that too. So let's get rid of that. Okay, sorry guys. I didn't do this one in the wrong spot. Let me go back for a second. This is where the not editing thing is the problem. So here's the 2-day. And I went over to here for some reason. Okay, I wasn't thinking. So I need to go back further in order to do this properly. So I'll set it for 3 days. So we're just going to kind of eyeball the high lows here. It looks like here to here actually, right? High, low, yeah. Oh no, really? It looks like right here. Yeah, because we would count this day. So what am I saying? Yeah, so this is our low basically right there that would have been marked. Oops, went on. And then this would have been our high, like right there. So these lines, these profit pivot lines, will now be in different. different areas. You know, you won't have to, you'll be able to see those because you'll be on the right day, but I'm doing a day backwards. So, all right, we got that corrected now. So now we're going to open up the 5-minute chart that goes back up to 10 days, right? And hopefully that didn't throw this fib off. I don't think it did, but, and we're going to look to see what crossed. So the first thing we do, since we see how the price action drops off here, so really we only have from right here to right here, because this is the day we're trading. So I'm just going to zoom in on that area to right there so I don't get confused again. So here's where we would make our profit pivot lines. And where do we make those? Look at how that fib. Oh, that's because, is that where, oh, that's where I marked it. Is that where, no, did I mark it there? I was going to look how perfect that is. I marked it there. I always, I do that a lot where I go like, that's amazing. But anyway, so here's the day we're trading, right? This is the 21st? No, it is not the 21st. Here's the day we're trading. Okay, so you want to go back further. Start your profit pivot lines further back. So why did I do that wrong? Let me do that again, guys. Sorry. Let me auto zoom that differently. So yeah, here's the day we're trading. So did I go too far? So I want to go from here to here only. Well, I can go up to here, say. I must have gone too far before, right? So we wouldn't see any data past, I mean, maybe a little past 740, but it's better to have the profit pivot lines in the open session. So let's start marking them. So we don't want to put any in between. That's why I kept these extended to the left. So let's start marking, and I'm looking across the screen to see when I start to mark a candlestick over here, is it touching any over here, like this area and this area? If I looked at how the 4 of those touched, that would be an area I'd want to mark. Oh, let me make these white. So we'll make all these white. No, we'll make them blue. We'll make these all blue. Save that. And these are profit pivot. Now, I'm not going to... This is how the book... Oh, this is how the book says to do it, to write it down. But if you guys could just go PP, or you could just do a certain color as you start to trade, because that's what we all do. But for the sake of the video, I'll just show you this. So all these blue lines will be profit pivot lines, which is where you're going to want to take, you have the choice to take profits. So I'm going to go ahead and mark what I see here. See, I'm hitting the bodies, and I'm looking across. They do touch in a whole bunch of different places. I don't know if these are going to come into play because we're getting below, the breakout by quite a bit here. But they might, they might. So I'll go here. I can't remember what it looks like on the other end there, but if I didn't know, this is the kind of stuff I would do. Anything below. Now I would make these red lines below the breakout low, trying to see, because I like to capture some right at the very within like 8 to 10 cents, and that looks like that's a lot of touches right there. So that would probably be enough for me, and it has the fib here for that below the breakout. Now I'm going to go across the day that we missed. So here it stopped here on the way up, so that would be one here. Then we have them over here, and as it dropped back down, you have it kind of there, a whole bunch touch there. I've kind of captured that, maybe there. And now my eyes are going to look across more. I'm going across to the right, looking for the fib. Got that picked up. Oops. Marking here. This one. This isn't silly, guys, and I'll show you why in a second. You're like, what are you doing? So it crested here and turned around. Now I could zoom in and make this more exact. I'm doing it pretty quick. I need a tight one. I always want a tight one to take profit right away to give me an option, especially in the beginning breakout. I mean, a lot of times I kind of feel like I want to wait for the five minutes to pass, but it doesn't call for that in the strategy. So, all right, now I'm going to go more to the right to see, are there a bunch right here? Because this is the day before, right? No, this is the actual day. Did I miss any in the pre-market then that maybe I should have marked here? That's in between. See, we're below, so you never mark anything between. Obviously, the fib is there. You can't get rid of it, but you would never take a trade in between the levels. It looks like everything's picked up on the pre-market. So now the fun part. What happens? And what happens that day? It's all marked out. That was it. Take a moment to reflect. Now let's go to the day chart and see what happens. And then we'll go over the rules a little bit. So this is the 21st, right? Okay, so this is the day we marked out. So let's zoom in on the first strategy, which is only the first 15 minutes. So I'll go a little tiny bit further. That's it. And then we'll zoom way up so we can see what does the price action look like here. Oh, we have to keep it in. So you're seeing, unfortunately, you're seeing my volume profiles making it hard for you to see. This is very important to have this set up, and I do use it on this strategy, but right now we'll take it off just so you can see better. Okay, so here's our breakout high, here's our breakout low. It says don't trade the first 1 minute, okay? And it looks like you would have had a good trade there if you did. But on the second one, it broke the level. You see it right here? You broke the level. It opened here. Now, it might have gone right back up. So in a situation like this, well, let's just talk about if you took a winning trade. It's hard to see how the price action's moving within a candle, but let's just say it went up, then went down, just for the sake of it. And we'll go over what you do if it didn't do that way. So it broke that level. The strategy says take it at the very first profit level. Get out. Get in at 127.14. Get out at 127.09. 5 cents. 100 shares, $5. 500 shares, $25. Whatever it might be. 5 cents, whatever share size. Or, depending on things like the volume profile, things like the moving averages, things like the VWAP, things like what it talks about in the book, other indicators may say to you, I'm going to hold this longer for the next one. So if you held it for the next profit pivot line and you didn't get shaken out here, your resolve was, I need more, and you go down to the 126.98, then you now going short would have made 14 cents, 16 cents. So now you've got quite a bit bigger profit. And then you're still holding. Let's just say you're still holding, and then it starts to turn around. So here's what the strategy says if you're holding as it goes the other way. If it breaks back through a line, or breaks back through a pivot line, that's a sign to get out. So if it came up, faded, broke back, get out. That's what it says, a sign to get out. The other sign to get out, if it traces halfway back through the last candle. In this case, that would be way the heck up here. So it wouldn't even come into play. And then the other thing is if you've met your max loss per trade. Well, if you were already in profit, that wouldn't come into play unless you just let it keep going back. In my opinion, if it broke this line, the worst I try to do is I never, if it gets to the next one, I get out so I keep my original profit. But here we go. First trade, profit. Whatever it might be, $5, $25, $100, your first trade's a profit. Your next trade, it opens here. So at some point, it goes red, but the strategy says if it's a green candle and it's going up, you cannot take a long, you cannot take this trade. If it's, now I make mine green and red, whatever. If it is above its open at any time, but you're below the breakout, you cannot take a trade here. If it has dropped below this, if you were astute enough, you could have captured this and then got out at the first profit level. So this is a winning trade if you're fast enough. Most people probably wouldn't take this trade because it probably would have been showing you some powerful green before it went there, and then they would have thought about maybe getting in here and getting out. So you could have lost. But if you followed the rules exactly, this is a winning trade. It's hard. The caveat I'm putting on this is it's fast. It moves fast. This is a 1 minute chart. It moves fast. You might want to have hotkeys. You might want to use the ladder. if you're a Thinkorswim trader, and just quickly set your, like, I'll go in here and go out here. So if you did play by its rules, which is hard, you have another 11 cents here. So, 100 shares, 11 cents, $11, right? So is that right? Yeah, I think so. So, math teacher. It's been the new phrase. It's been a minute. I hated that phrase when I first heard it. Now I'm starting to use it. It's been a minute. Sounds better than a while. I don't know why. Is that too cool? Whatever. Okay, it's hard to keep up. We need a special urban dictionary for old folk. Anyway, so now we go to the next candle. Untradable. It breaches that, but briefly above. So some people might have popped in right here, and it could be losing. I would not have yet. I can tell you that. I would have waited for more action. Technically, the strategy would say go in. If you really were that fast to catch that little clip there, and then get out, somewhere your max loss or halfway down. So that could have been a losing trade. I think most people would not have captured that trade. Then we have another one. Again, same thing. It's just not, it's almost untradeable to lose money on, right? The first time that it becomes tradable, where it opens here but then could possibly leave, is when it breaks this level or this level, and it becomes a winning trade again at this level. So right here, it could go either way. You might get shaken out. Like you got in right here and it didn't go all the way down. It went up here before it went down. I can't tell for sure, but, and that's where scalping skills might come into play. But this is 50-50 whether you made money or lost money on this trade. You could have, or broke even or whatever. Now we're getting up to breaking the high. This is a winning trade. You do the breakout, you have your first profit level right there. You made money, right? So the next one here is it opens here, right? And it's red. It never breaks the level. Remember, it opens here and never breaks a level. So you can't trade it if it goes back through this because it's still a red candle. So unless it breaks above its open and then breaks a level, it's a very specific rule that makes all the difference for winning or losing trades. And we're gonna show them here together, why that makes such a difference, because we're definitely ahead on the money here. And I just picked the first stock, guys, so it pretty much comes into play on every stock. And the more that they're consolidated over the 10-day period, then the better, the better the action is for making money. My cat's decided to just sit right in front of the keyboard here. But since I'm trading later, I need all the good musing cat luck I can get. So then on the next one, so this is an untrade. This would have been untradeable because it never passed above its open onto a line. I hope you understood what I'm saying here. Now on the next one, it opens here, breaks it, probably pretty strong. You're in. You have your choice of two different profit levels before you get out. My typical way I trade is I hold it to go for the more money. I probably would be holding it into here until it breaks down one and even maybe breaks down the second. Then I get out because you get a lot of this. So, but sometimes if the money's enough, I'll just get out, if I'm looking at other indicators, I'm just going to take that $100. Maybe I can make 200. I'm going to take it. Now the strategy says that once you get out of a 1 minute candle, you can't just jump back in until the next candle. That is also an extremely important rule based on the way the price action moves above the breakout within the profit pivot levels. Thousands of hours of backtesting, lots of hair pulling and organizing and making sure that everybody combining their data, that this was working. And it was at 60, between 61 and 66% accurate for traders that know how to trade. And then with the advent of changing just what I'm talking about, it started to become 80, 90% accurate. So it may seem arbitrary, but follow along with me and watch what happens here, right? So on the next one, you get back in wherever you get out. You can't go back. If this dropped here first, this is red, all this action here, right? Because here's where it opened. So at no time would you be taking a trade in here. You can't get shaken out because of the very rule, like, oh, good, it just protected the hell out of me. Or as my mother says, HE double toothpick, because I never got in because it's red. You can't get in until, so right now when you pass back through, are you green? Here it opened. So yes, you're green as it breaks that line. Here's a profit level. Next one's a winning trade. Same thing happened. Here, you get in, it's moving up and down. You haven't taken the trade, it's moving up and down. Breaks that level, you're in. Profit, potential profit, depending on how long you hold. Another winning trade. Okay, now we're looking at this candle. We're at 9:41. This goes till 9:15. The first strategy does. So you go to the next candle now. So this candle opened here, and it's above this line, so it's non-tradable. So at some point, it turned green and broke this level, and it would have been tradable, and you might not have hit that. It's very close to that fib. You might have lost it as it came back down. This probably, in all fairness, is a losing trade because it did turn green at some point. But overall, you're way ahead, right? So if you do it all the time, you'll see that when I trade this, I start to look at the size of other candles and look for a bigger commitment before I just jump into every little trade. But that's not what the strategy says to do. It basically says just keep going. You only have 15 minutes. So again, these are untradable candles here. I'm just trying to see here. So this opened here and only broke red. This opened here and only broke red. It would have had to break that level. So if you can see, you can't look at these, go, look, it could have broke that. It opened here and then was only red. It was green, but didn't break a level green, right? So this opened here and never really broke that level green and just was always red. Now you're right near the end to trading. Look at how these set up. It's amazing. You break the breakout, and you've got one choice, two choice, three choices to make money, or hold it. You don't have to get out at 1 minute, right? Hold it into the next one, and you could maybe got out there, just said, this is a hangman or spinning top. It's indecisive. I'm not saying it's going down, right? Actually, this is when you look at patterns and buy the candlestick pattern playbook. So let me just see, is that halfway down? Yeah, it's very close to a bull flag here. That would have definitely caught my attention. And this is a tweezer move here, telling you this action's going up, the length of the candle. So I would have been looking at all that stuff to maybe hold in longer. But if you followed the strategy, you had many. I'm just talking about how much profit you make at this point, because you're making profit here no matter what. All right. Then the next one opens. If you just got into this candle, right, and only traded this candle, it's not very good because it opened here. And it closed here, so you wouldn't have, if you got in here and it went down first, you could have lost money. I never would have got out of this trade. So it's just how you trade. So this is a possible loss. I should recognize that. If you got in and it went up first, it never made it. Like if it did that action first, it stopped and went back down, I would have got out, pretty close. I wouldn't have waited for it to get halfway through here. Again, your discretion. This one opens here, breaks it, so you can't take a trade till it breaks this level, right? So you wouldn't have got shaken out here. So it breaks that level, profit at the fib. Starts to fade off, get out. None of these are tradable, maybe, but you're past your time. So there you go. The very first one I picked, and I bet Tesla is similar, but I'll be making more videos. But I wanted to make sure I got out you're on top of my notes. Oh, no, I wanted to go over and make sure I got out all the rules. I have a book page up here. So I'm going to read the rules before I sign off for you guys. I'm going to put this out this morning. So make a trading plan, max loss per trade and loss per day. Decide on the open strategy you're going to trade. In this case, I decided on open strategy number 1. Find 3 stocks using the predefined scanner settings. So remember, I went over the scanning settings in the beginning. Okay, so and there they all are again. And buy the book though, guys. I mean, this is just giving you a jump start. And don't forget to review it. I mean, that's the lifeblood for the people. For the best results, determine on a daily chart that these stocks have moved in a consolidating pattern. So you saw me do that over a 10-day period. So meaning the open and close of the last day's candle intersects with the price action levels of as many of the previous 10-day candle bodies as possible. Okay, I'm reading it verbatim here. This will offer multiple profit pivot point levels to identify for trading the open strategies. Then further look for a consolidating pre-market pattern that should be that should be less than half the price action up or down of the previous day's ATR. It says previous day, meaning you're looking at the 14-day average on the previous day candle. So it's not just the ATR of one day. So make sure you understand that. This will provide the best possibility for a short-term breakout of the open strategy. So remember, this is a good time to recap on what is this strategy. Since the beginning of scalping and short-term day trading, people have been trading breakouts, and they just determine what's a breakout. What is a breakout, right? So there's all these different strategies that I've been trading over the years that determine when a breakout is. So what this is a different level of really micro an understanding of different breakout levels based on all these historic levels people have been trading, and then adding that component about only going long above and only going low below the breakout ranges. That's new. Nobody's ever said that, and nobody's ever had these profit pivot lines traded a specific way. So this is a revolutionary strategy. I wish I would have started with that if you've been trading breakout range, this is not something you could scoff at, because, and maybe you've already done this and you just don't have a book or don't tell people. But to me, I hadn't thought to do it because I'm a scalper. So I'll always, look, I can do pretty well without it, to be honest. I'm not blowing my own horn, but I might scalp up and down above and do okay. But the studies have shown, the logic has shown that if you follow this historical data, whatever you want to call it, you're going to have a lot more winning trades than losing trades. So if you don't let the losers get out of control and you really get out halfway down retracing the previous candle, or at your max loss per trade, or as you're going for more profit, as it breaks down through some of the levels so you keep the profit you had. That's so important, and that's really the big difference in this. So I'll read on now. So then you look for a consolidating pre-market pattern at least half the price action of the I'm not reading. I'm trying to catch up to where I was up and down of the previous day's ATR. This will provide the best. Okay, then next, you enter your stocks on a watch list daily guidelines in order of the best 10-day and pre-market consolidations. So you just use those two things to rate your stocks before you set up everything else. Your pre-market and how many days it touched. What's the pre-market look like? How many days? Because you don't want to spend all day marking. You want to trade, right? So you got to get it in there quickly. So that's what it's suggesting you do. Then you mark your ATR revenue range. Now it's called, oh, there's one more thing I've got to go over. My God, I almost forgot. Revenue range is the ATR. You saw me mark it up. And your breakout range is something different. So if you want to narrow down the stocks, if you're having trouble, you need to figure the volatility percentage range. So that's something I completely was forgetting here. So thank God. Okay. So how you do that is you take the high and low of the volatility, right? Whatever that might be on this. What does that say? 86. So 127.14 to 127. It looks like 86. Is that what that is? Yeah, 86. So you've got that at 60. Why can't I add? So 14 is 20 to 60. So 66. 72 cents, it looks like. So you take 72 cents divided by your ATR range. I think our ATR range was our total ATR range for this was $6.44. So So you take 0.76 divided by $6.44, and you have 11%, 0.11. You're looking for a volatility rating of less than 25%. This is astounding, this rating, 11%. And this particularly comes into play for the first open strategies 1 and 2. So when you're below 25%, you have, I don't want to say a 75% chance of breaking out, because it doesn't actually work that way. But the lower the volatility rating is, the higher chance for a breakout. So that's something that I would have probably done to make sure I wasn't wasting my time. I would have taken these two levels before I even started marking out the fibs and the other thing. I would have quickly marked the ATR. I would have quickly figured the ATR. I don't have to mark the levels. I would have quickly figured I would have taken this breakout range. I know the number of the overall ATR, and I would divided the breakout range by the ATR number. I don't need to set these up yet to do that. That's afterwards for the profit pivot levels. I hope that was clear, guys. So that volatility rating, people ask all the time, how do you pick your stocks? How do you narrow it down? Well, that narrows them down, guys. For the first two strategies, that narrows it down real tight if you're having trouble deciding, because you need the stock to break out. I think you might have seen me trade MU one day or whatever, and it was just like, it wasn't breaking out, or it only went like 4 cents, then back into the breakout range, then 6 cents, then back into the breakout range. And because I was trading market, not on the ladder, not limit, not hotkeys, not any of that stuff, I think I lost money, or it was really hard to make money on that. So anyway, let me go back on. So after you've marked your ATR levels, I've talked about that. Volatility was early on, you should have done. Then you mark your 2-day and 10-day Fibonacci's. Then you mark all your pivot profit levels based on the ATR revenue range. That's why it's called a revenue range now, because it's not only the profit pivot levels, but also the dividing the pre-market by the ATR. So that's a revenue range overall in there. And then, then it says here for open strategies 1 and 2, you should immediately determine the volatility rating. And then the next thing would be mark your breakout range high and low as per open strategy you're trading, if you haven't already. So we already talked about that. So that was all. And there's more notes. I mean, there's a whole book. So there's a lot more in the book, a lot about understanding yourself when you trade this kind of strategy, a lot of graphics that show marking out each strategy like I just did. So amazing book, really giving it a 5-star myself. And once I can rate it, because I got a pre-copy, and I know that it went to all the prop firms and a lot of other places. So I think you're going to see this being adopted. I don't see a negative to this trade. And I would get the companion book. I wish they would have put the fifth. I think the fifth strategy came into play after the main trading book had been shopped around and sent to all these different people. They got it copywritten, written and put into the Library of Congress. I mean, so this is a big deal, for the $1 Million Margin Club, and I think you'll enjoy, a good profit with this if you control your losses. Okay, guys, this was just the first installment of this. I'll get this out right now, and if I were to call anything today, I would go NVIDIA long. Remember, I am not a licensed financial advisor. I do look forward to streaming my picks with you sometime. I have a lot of vacation things I want to do before I start doing that, where I'm not locked into every morning being here with you guys. So once I start, I want to be fairly consistent. So it's a lot of responsibility rather than just recording one day and then maybe releasing it 2 weeks later. So it's hard for me to wrap my head around that I would be doing that every day. So I hope that all works out. But anyway, listen, thanks for watching, and I hope this strategy works for you guys. I will be trading it, and you'll be seeing a lot more of me do that. I will make this layout available for you with this video. Okay, guys, stay green out there. Stay inquisitive. I'll talk to you soon.